Welcome to the Investor Coaching Show, a podcast to help you get an insider's view of the financial world and escape common investment traps. We look at the financial news of the day and help you make sense of it so you can relax about money. And here's your host, Paul Winkler.
All right, we're back here on the Investor Coaching Show. Paul Winkler, Evan Barnard here with me. PaulWinkler.com is the website where you can do a lot of things, not the least of which is look at Social Security workshops, look at Medicare workshops, Medicare supplements. It's not going to be too long before we're actually in that season again. You know, how do you choose between the different types of programs out there? What are some of the misleading advertising that you'll see? Go on that website and look under the webinars tab, and you can see all kinds of stuff there. So be sure to check that out. The other thing that you can do there on the website is subscribe to the podcast, where you'll get daily downloads of things that are topics, and it's put into a little nice form that if you see that there's a particular topic you want to hear about, we'll have audio on that. A lot of times we're talking about the news of the day, what's happening out there, and you can check that out. Or you can also, you just want to go, hey, let's talk to one of you guys. So, we have the offices all around town, 10 of them, and you can set yourself up for a 15-minute phone call just to say, hey, I want to know about this, got this question about this, and I want to see if you guys can help me with this. That's what that's there for. Makes it nice and easy so you can just get on the phone, talk, and say, yep, this works for me, or, it doesn't work for me. That's okay. It's, we're not going to be for everybody. You know who we're not for?
Everybody doesn't like donuts.
You know who we're not for? We're not for that person that likes to do what Evan is about to talk about. How do you like that for a lead-in?
Wow.
Go ahead, man. Good. You talk. Well, you and I were talking to the right. I said, what do you want to talk about? Yeah, go.
So this will be a throwback for folks. I'm reading this paper through my
physical newspaper.
Formerly nicotine-stained fingers.
No. Rush.
But I get these newspapers, and they're about 20 pages or so. Mm-hmm. And, it's about the size of the Epoch Times or something like that. But they usually have a title like The Independent Investor or some other stuff. And they have some great articles, and it looks like a legitimate newspaper. Mm-hmm. And I'll read you a couple of these headlines. This is from January of 2025. That will become significant.
January of 2025.
Yeah,
Got it.
This just January.
All right.
And, special focus, cybersecurity investing. Red China's apocalyptic master key to the internet. The communist superpower cyber warfare division is working feverishly.
Oh.
And so you have several of these articles, and then kind of buried in there, you have these things of introducing the tech investing expert from, Scope Technologies Corp. And this is poised to do X, and they are going to do these government contracts. And then you have another article, a critical warning from the NSA, and then you have something about Scope Technologies Corp's, quantum password proof, internet access and all this kind of stuff. And it's a whole newspaper. And basically, in there's a disclaimer buried in it, kind of like on your editorial page that says, somebody paid them $3 million to, produce this document.
Yeah.
But here's the interesting thing. I was cleaning out the office when I found this. Uh-huh. And so I thought, well, I'm going to see what Scope Technologies Corp has done since January when they said this thing is going to set the world on fire. Right. And it was basically $1 a share. That'll tell you something on January 1st.
Yeah.
And it closed on the 4th at 25 cents a share.
See, and you think at $1, it's so cheap it can't go any lower.
And
that's
the
perception, isn't it? Yeah,
right.
Well, it can, and it did.
And, so here, all of this,
down
goes on.
75%.
And you read
gosh.
that, and particularly if you are, say, in that world.
Right.
Like I'm into AI, I'm into cybersecurity, I'm worried about this stuff. It's very easy to say, wow, here, now I've got this home run. These people are going to do it. And even if, which I honestly don't know exactly what they do, full disclosure. All I know is they've lost 76% of market value. But even if they came up with the technology, that doesn't mean the stock is going to do well. They could end up getting bought. They could have a competitor. And yet people, they mail these newspapers because enough people buy that stock that it makes sense for them to mail all those newspapers to people.
Yeah, and these companies will have, when news comes out about them and maybe they are going to benefit for something, their stock price will go up right away in the anticipation that that good thing will actually happen.
Yeah.
By the time they put it in a newspaper, it's too late. I mean, unless they got the newspaper to you in less than 10 seconds, because stocks, if you watch the news, if you watch anything, watch a financial channel, anytime where you'll hear a piece of news comes out about a company and they'll show a chart and it won't be this gradual move up. It'll be like looking at a cliff where you have the stock at a certain price, and then the news comes out, and immediately the stock sells for the higher price or the lower price based on whether the news is good or whether the news is bad.
Yeah.
And that is how the markets work, and people don't recognize that, but they think, hey, I know this industry. I really know this industry. Well, you're not the only one that knows the industry. The people that work for the company, the insiders, the CEOs of the company, are also helping to set the price. Insider trading in the company is watched like a hawk. People will watch what our insiders are doing. Are they buying or they're selling their own stock? And that will give them some impetus to determining whether it is likely to go up in the future or it's likely not to go up in the future. So that information gets built in. People don't recognize the efficiency of markets. You hear that term, and there are different types of efficiency, but the idea being that most of the information is built in. Yeah, there can be things that are unknowable that aren't built in, or maybe the market gets wrong, but it's usually based on something that isn't predictable. And and when I say usually, like you look at the tech bubble, there were a lot of people that were out there going, "Hey, tech stocks are overvalued," but they don't know necessarily when that tide is going to turn. Just like we don't know when people are going to go, what, Bitcoin's a really bad idea. And I shouldn't be paying $110,000
for ones and zeros.
Yeah, ones and zeros. You don't know. There's no way, because you've got to be able to predict human behavior. And that is notoriously difficult to try to figure out, the madness of crowds, as Sir Isaac Newton put it, right?
You don't even need crowds. Just if you're listening out there and you have a teenager or,
No, I mean, Evan,
like, oh.
What a point. I mean, this is something I've been thinking about. Oh, it's funny you say that. This is fun. I was thinking about this the other day. I was thinking about the idea that people are getting older and this transfer of wealth that is going to take place. And I am being asked to go speak at a group of older people. It's a bunch of people that are have this club. It's a book club. They're asking me to come out and speak at it, and they want me to talk about Bitcoin and cryptocurrencies and things like that. So I'm putting a whole presentation together, and I'm walking my son through this and going, say, so here's what I want in there. Can you look up this? And he's done some really dynamite little research regarding that and looking into what ought to be in a presentation like that. And one of the things, I haven't said this to him yet, but I'm going to say, hey, look, here's the other thing I want you to think about putting in there. There are a lot of people that are older people like you that have spent your life putting together assets, putting together retirement plans, putting together investments to pass on to the next generation so that you can make a difference for them. And are you educating? Have your kids been educated? Has the next generation been educated not to chase after something like cryptocurrency, like Bitcoin, like gold? Do they understand that it's not an investment, that it is pure speculation?
Yeah.
Because you could have your entire net worth blown up because you didn't spend time or make sure that your kids were educated. And trust me when I say this, they're not getting educated in the schools about this type of stuff.
No.
They're just not. If anything, a lot of times the education systems feed this type of frenzy. Somebody was talking to me yesterday about this, the stock market game.
Oh, yeah.
Yeah, somebody at the station.
I sponsored that back when I lived up in Indiana and Ohio, and I sponsored that for, the elementary school for like 2 or 3 years.
Right.
And I just bang my head against the wall now thinking,
Yeah, well, you didn't know any better.
Who did I screw up? Right, yeah.
Well, that's just it. And a lot of people go, they hear what we say and go, well, my financial advisor can't be doing this. I'm going, a lot of times your financial advisor doesn't know these things, because they've been indoctrinated in the system. I was working for the big broker-dealer, big investment firm. was working for one of the biggest mutual fund companies in the world. As a matter of fact, that was my broker-dealer. Another company that I worked for was one of the biggest insurance companies in the world. And this is, you're taught to sell the products of your broker-dealer, your investment manager. And, you can hear people say fiduciary. Well, we're a fiduciary. We're a fiduciary. And then you go, well, what does that mean?
Right.
And when you really dig down into what it means, it doesn't mean nearly what it should mean. You have people out there advertising on this station that they're fiduciaries, and yet they're out there selling annuity products, you're not a fiduciary when you're doing that. But they're still doing it. They're getting away with that. And you go, well, how do they get away with it? Well, there's very, very little. The regulation isn't nearly what I think it ought to be. If you go overseas, I've said this before, you go to Australia, you go to, into Europe, a lot of countries will not let a financial advisor, period, end of sentence, will not let them receive commissions and give financial advice. They won't let them do that at all. In America, I remember, who was it? Jonathan Clements had an article about choosing a financial advisor. Oh. He says, in America, remember him? He had this article about choosing an investment advisor. He said, choose a registered investment advisor that has a fiduciary responsibility. He did say that. Make sure that they have a degree. That's what I always talk about. Make sure that they're chartered financial consultant, certified financial planner. Those are the two designations that he picked out as well. The other thing that he said in there is he says, in some countries, and he actually picked Malaysia, which was pretty funny. He said, in Malaysia, you have to have a degree like that. He says, in America, you just have a shingle and a place to hang it. That's it. And unfortunately, most people don't realize that the level of education is that low. I mean, it really is not that difficult to become a financial advisor. Series 65, go get that. And, had one guy in our office, got it in 3 weeks. I couldn't spell financial advisor 3 weeks ago, and now I are one. No, I made sure that he was not able to give advice after getting that. That was just that was just step one, so he could talk to a client, but he wasn't going to run an office. I mean, that wasn't going to happen. There was a lot more that I think people have to go through in order to be able to do that. But unfortunately, the bar is fairly low. Hey, just a note to you podcast folks, we just came out with a retirement income guide, and I'm super excited about this. There are all kinds of myths about taking income in retirement. People worry about running out of money, and rightfully so, because a lot of these myths can actually cause that. Now, the myths that you typically hear about, number one, dividends, living off dividends in retirement. Real estate, life insurance as a retirement investment, and annuities and interest-bearing accounts and target date funds. There are all kinds of things out there. What I want to do is put something together that walks through why those things are problematic, number one. Number two, the other thing that I wanted to do is walk through the evidence-based research on taking income in retirement. And we got a ton of data going all the way back to 1900. What's the logic behind it? And it's intensely logical. So we put that together, and all you have to do to download that, making it super simple, just go to paulwinkler.com/relax, and you can actually get into that very easily right there. So I would urge you to do that. Check it out, because I think you're going to really like it. paulwinkler.com/relax. All right, back here on the Investor Coaching Show, Paul Winkler, along with Evan Barnard, talking money and investing. Okay, so every once in a while I see something in here in Smart Money that catches my attention. My mother, 81, discovered her millions, quote unquote, and investments are gone. What can I do?
Oh, gosh.
Ouch. I've seen that happen. I remember one guy comes to me one day, "You're my last hope. You're my last hope." And I was like, "What did you do?" He had some kind of a thing that he was investing in for tax purposes. And, so a lot of people do that. Financial advisors will spend a lot of time on taxes. And you should. I mean, it's important. But, they'll do that, and they're letting that tail wag the dog. You got a lot of these people saying, "Oh, you got to do Roth conversions." And then I'm like, watch it. The tax law may change and may not be a good idea. And then it did. And it wasn't as good of an idea. But, a lot of people end up paying taxes, or they'll invest in the big thing. When I was an investment advisor working for a broker dealer, the big thing was limited partnerships was one thing. Tax credits was another area. Mm-hmm. And I have seen more people lose a ton of money on those types of things. Sometimes it's illiquid, real estate investment trusts, and they stick money in. There are a lot of firms actually out there selling that as an income vehicle in retirement. As a matter of fact, my income guide, that's one of the things I talk about. Is like, watch out for this kind of stuff. Really do. But this lady says, she 81, discovered her millions in investments are gone. What can I do? And it says, what can I do? And it says what she thought was millions turned out to be $500,000. Before this happened, she gave me $50,000 to buy a new vehicle. I would have given the money back, but by the time we figured it out, I had already bought the new vehicle. And since this was discovered, I had paid a few of her bills. Is there anything I can do to help lessen the situation? Selling the car doesn't make sense, because you get the depreciation right away as soon as you drive off the lot. And last time, I think I was having like 20% depreciation right away.
If not more.
Yeah, it can be really bad once you drive off a lot. And, so a lot of people will go, hey, I'll buy a car 1 year old, 2 years old, and that way the depreciation's already off of it.
Yep.
And I'm still getting a pretty new car. She lives on her own. And, I'm not hard and fast about that. If you have enough savings and you've done everything right and you want a doggone new car, go get a new car. I hear some people that say, no, you never buy a new car. I'm like, don't be such a control freak. If somebody wants a new car, go get a new car. But a lot of people do that. They buy new cars and they're not financially in great shape. And they don't have enough money in retirement and they don't have really good fiscal responsibility or situation going on. So, it's really one of those things you really watch out. Just be aware of what kind of cost you're really incurring buying brand new versus a year old or 2 years old or something like that.
So did the article get into why she either lost the millions or thought she had more than $500,000?
Yeah, that's where we're going.
Okay.
That's where we're going. It says the reversal of fortune does not provide a moment of grace. And the question was, how did she do this? Did she have bad advice? Did she, let's say, give away too much money? That was a possibility because she's given money to her daughter and she's giving money to other people, neighbors or, whoever. Is she just giving it away? Is this what's going on? And she could have invested poorly, risky stocks, lack of diversification, might have fallen prey to an unscrupulous financial advisor was one of the things that the writer conjectured. Said she may not have a spending or gambling problem, or she may have one. So that may be something that she's doing. Hiring an advisor to manage assets might provide with answers, making sure you hire a decent one. Really watch out. You don't want one of those ones that got her in trouble in the first place. You really got to be careful about that. Said next visit, one of the things you might do is organize her paperwork, accompany her to a doctor's appointment. A court will not grant conservatorship because the mother spends too much money. In the absence of dementia or signs of dementia, forgetting to pay bills, falling victim to scammers, or displaying the ability to manage her life would raise the bar. So look at those types of things. There's a possibility that you may actually have to take a little bit more control. But they said the guardianship was a last resort. If your mother's situation deteriorates, full guardianship or conservatorship would allow you to make important decisions in terms of finances, health, and well-being. And a lot of times you just got to recognize as people get older, they don't like losing control in that way. It might be a fight. So sometimes it's like, hey, Mom, I'll give you a couple choices. You could do this, you could do that. But certainly, a lot of times older people do get taken advantage of and they end up losing a lot because they think that their mental faculties are greater than they actually are. Hey, this is Paul Winkler. Hope you enjoyed today's edition of the Investor Coaching Show. If you want to learn more about what we do, go to our website, paulwinkler.com. Until next time, I'm Paul Winkler, reminding you that I believe that more educated investors are more confident investors, and confident investors are more successful investors. Have a great one. Advisory services offered through Paul Winkler, Inc., an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and not intended to provide specific advice or recommendations for any individual. To determine what investments are appropriate for you, please consult with a financial advisor. Paul Winkler, Inc. does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation.